let's talk about obvious things, okay? One thing that is obvious is that the government is looking to finance its budget. The budget for this year is 3.6 trillion shillings, all right? Where does the government get its money from? Largely from you and I, taxpayers. Last year, we contributed a tune of 1.6 or so trillion shillings, among other ways in which we paid taxes.
I like you've owned this
Yeah, it's ours. Okay. It's ours, Ismaro. And then, so tax, and then there's revenue from such money-making organizations, and then there's financing the deficit via loans and other ways, development partners, grants and all. But let's deal with what we do. We as Kenyans, right? We pay tax. We pay tax through only one recognized way of government collecting tax, and that's the Kenya Revenue Authority. Now, what are your tax obligations, City? Let's start.
You mean beyond paying it?
No. What are your registered obligations? VAT, pay as you earn, income tax, that's a pay as you earn.
This withholding tax is what again?
That's income tax.
That's income tax, eh?
Yeah. Withholding income.
Painful thing. Yes. And then there's the direct income tax, equally painful. Then there are the indirect taxes. Now, the misfortune I have is I actually drive a car which uses petrol.
Right.
So I pay taxes directly.
Right.
Now, I'm not talking about the vegetables I buy, on which those who transport it load whatever costs of transportation onto that vegetable and the fruits I buy and everything else. So, yes, put it this way. I cannot escape being taxed no matter what I do.
Okay.
Yes.
Now, in those areas where you actually now have a direct obligation to pay tax, maybe in income tax, pay as you earn, or if you're running a company, then it has the corporation tax and such. Yeah? There are some cases where you forget. People forget these things. You forget to pay tax.
Forget.
Or for whatever other reason.
Let's just use forget.
Let's just use forget for now.
Yeah.
We're speaking metaphorically.
You forget to pay tax, and now KRA is coming and telling you, now because you've forgotten, let's just do this. Come and tell us that you forgot. And then let's work it out from there. And they're calling this the Voluntary Tax Disclosure Program. But maybe I'm just getting it all wrong. Let's bring in a tax expert from the Kenya Revenue Authority, Domestic Tax Department. Monica Githuba joins us on the video call. Good morning, Monica.
Good morning.
It's good to have you on the show. Welcome to the Situation Room.
Thank you. Thank you for having me.
So let's start with that Voluntary Tax Disclosure Program. Did I get it right? Is it for those who have, in one way or the other forgotten, or, they were out of town, or, other things, pressing needs, and they did not pay their tax?
Yeah, you could say that, but the definition is this is a program that allows a taxpayer who had previously undisclosed tax liability to disclose the same to the commissioner for the purposes of being granted relief of penalties and interest.
Okay. Say that again.
Okay.
Repeat that again.
A taxpayer has an opportunity to disclose their previously undisclosed tax liabilities for the purposes of being granted relief of penalties and interest.
Okay.
Yeah.
What are those cases of undisclosed tax liability? Like what?
They may arise, They may arise from different instances. So you find that maybe as a business person, you just set up, then you realize that, oh my God, I should have been paying some taxes that I've not paid. And you live in fear, wondering when will KRA come here and just collect all these taxes and I won't be able to pay. So you find that people shy away from coming into the taxes because of that. And then as KRA, we want to enhance our relationships, and so we want the people to come and now start a new journey of tax compliance. So the situations may be different, but we are not even considering that. We're saying, do you have undisclosed tax liability? Bring it.
Oh.
Okay. What constitutes a tax liability? I didn't quite get it. It's not that you didn't explain it well. I am the one who understands things slowly.
It's okay. So the taxes that we have direct taxes and indirect taxes. The direct taxes we collect, maybe you can say corporate taxes, individual income taxes. We have also maybe capital gains tax. We have a turnover tax. So those are taxes that a business person or an individual in Kenya pays from their taxable income. And then we have other indirect taxes that the business collects. For example, maybe the VAT, value-added tax. We also have excise tax and also some agency taxes that employers are supposed to collect, for example, PSC1. So you find as a business person, you might have all these types of obligations. You know you've not declared, you know maybe you did not register when you're supposed to do that. So this gives you an opportunity to do this without going through the compliance steps. Because now we are saying you're the one to come to us and say, assess yourself and give us this information in the prescribed form, and we will put you on a payment plan of up to 12 months.
And is that guaranteed, Monica, that somebody presents themselves, a business presents themselves to KRA and says, okay, for one reason or another, I didn't actually know that I was supposed to be making all of these payments, or or like you say, I forgot, maybe I was away, I was not aware of all of these things. Is it guaranteed that the pursuant action will be, all right, we take your position into consideration and we will then put you on a plan because this actually is your obligation? Or does it become a punitive affair?
No, it will not be a punitive assessment because this is something that we've done before. Amnesties have been there. For example, in 2016, we had an amnesty for the residential rental income earners, and those who took it up can tell you that we have remained, we did not look at the past. So that amnesty allowed those ones who had not declared rental income to come in and declare the same, and they'll be doing it without having any form of victimization anywhere. So even now, we are confident and we're sure that our taxpayers, the ones who take this up, will become our ambassadors and just build that trust because we are your partner in business. There is no KRA without the business person. So we want our taxpayer to know that they can trust us as KRA as a partner in their business, and we want them to have a new and clean slate where they can now comply with their taxes going forward.
When you say clean slate, is it that the entire obligation is wiped out, or is it only the penalty?
So principal taxes is not wiped out. So in any case, you will not, unless if the principal tax is there, then it will not be waived. But then there's penalties and interest that arise off that. The penalty that we have right now is 5% of the tax due and interest of 1% per month. So you can see that for a business person who maybe started 5 years back, they might find that the 1 million has now grown to maybe 2.5 or which would now be too heavy on them. But now this is an opportunity that if they declare, for example, in the year 2021, then the amount that will be paid in this year will qualify for 100% waiver of penalties and interest. The amounts that will be paid in 2022 are going to qualify for 50% relief of penalties and interest, and the amounts that are paid in 2023 are going to qualify for 25% of the relief of the penalties and interest. Remember, we said when a taxpayer comes in, we are going to put them on a payment plan, and the commissioner has been given up to 12 months. So you can see that this is a long time, enough time to now make your payments in a scattered manner, and you're able to plan your business better with that payment plan.
Okay.
Now, when you say bring yourself, I take it that you don't mean physically walk to KRA headquarters and ask for you. There is a way in which you can get in touch with KRA. Is that not so?
Yes, but for now we have physical forms.
Yes.
And these physical forms are available on our website where a taxpayer can download the form, fill it. It's a one-page form, and take it to their tax service office. So because of this, the kind of matters that this is a heavy matter, so we expect that our taxpayer is willing to actually physically present themselves to the tax service office, hand in the form, and then get into a discussion and a written agreement with the commissioner on how they're going to clear this liability.
Okay. Using the word punitive, because that is the way in which it had appeared previously. I'm hearing you and looking at maybe the position that KRA has taken is that, you know what, let's welcome more people into the fold. In as much as KRA then has targets that must be met, are you looking at a softened approach? Because, Monica, the truth of the matter is that people in the country at the moment, whether businesses or individuals who are tardy on their obligation to KRA, are in a lot of cases aware of this. But the reality is one of fear because they are not aware of what will happen should they present themselves. So are you able to unequivocally give that position that, look, we're not coming for you, we're just asking that you become that you are aligned with this position? Because one of the major reasons why people will not bring themselves, as you say, is because they are afraid, simply put.
Okay. So I think the fear is the fear that has been there towards any seeming authority, any government authority in Kenya has had to encounter that fear, and maybe we even perpetuated it. But as KRA, we've gone through a transformational journey where we've moved from enforcement to trust and facilitation. So we understand that the Kenyan taxpayer is most likely willing to pay. And so the way we have tailor-made our policies is to enhance or trust and facilitate the taxpayer who wants to pay. Of course, we have to have enforcement measures for those who don't want to pay or those who are unwilling to pay, but we don't go to enforcement unless now trust and facilitation has not worked. So, and this transformation journey
yes.
Has led us to come up with some core values. We have trustworthy, ethical, competent, and helpful as our core values for the last corporate plan. And in this, the 8th corporate plan, we have added a value that is simplification, because we want to simplify payment of taxes. And you can see that is already happening with the turnover tax that we have, which is one of the most simplest tax system we've ever had, or mode of collecting income taxes that we've ever had. So I think the attitude now is we have to work together. We have to hold hands if we're going to go forward. And the Revenue Authority being a key determiner in the growth of the Kenyan economy, we have to partner with our taxpayer. And we are ready to adopt that. And I'm sure if maybe taxpayers who have actually interacted with KRA, who have not maybe taken the conversation of adopted their view of KRA from conversations, but from direct experiences, can attest that we have transformed over a period of time.
Monica, you're telling us that KRA has had a born-again experience, that they have now seen the light, and that they are now more user-friendly.
Preaching the gospel and not persecuting.
Yes, they are welcoming and embracing all humanity. I like the message, but in all honesty, KRA is scary. For most ordinary citizens, KRA is scary. The efforts that you talk about, excellent. The way you want to go about it, excellent. But there's something that has been bothering me when I hear this huge raft of taxes that we have. And let me ask this question. Is there anything that KRA does not tax?
Okay, we collect taxes from taxable income. So if you're generating taxable income, then there's some tax that you have to pay. And the thing, I think the perception that most Kenyans might have is that we are heavily taxed, because maybe they don't get the difference between the direct taxes and the indirect taxes. But if you look at the direct taxes, you're going to find that there are incentives that are there. Even the individual in Kenya, we are only collecting taxes from employees who are generating employment income of 24,000 and above. We get the personal relief of 2,400 per month. If you have an insurance policy, you get the insurance relief. If you have a mortgage, you get the mortgage relief. So we have incentives that have been put in our tax system that a taxpayer can take advantage of to reduce their tax liability in a lawful manner. If it's a business and they have some income and they have allowable business expenditures, they are allowed to claim the same. If we go to TOT, the tax is at 1% of your gross turnover. So we can see that the government is responding to the Kenyan person and saying, we hear you and we are doing our best. Of course, we have to collect taxes we have to grow, but then we hear the pain of the Kenyan person who's setting up a business, and the incentives are there for the startups and those who are doing heavy investments.
You know, it's interesting having this conversation, and actually, thank you very much for joining us today, because you're painting a new picture of KRA. Well, KRA has actually been trying to paint this new picture, and it's important that you keep reinforcing this, but also creating that awareness and education for all taxpayers to know this is what I can do, this is how I can benefit, or this is how I can actually just become compliant and not have to hide from the Revenue Authority. Having a conversation with Monica Githuba. She is a tax expert with the Domestic Taxes Department of the Kenya Revenue Authority. What we are discussing today is the Voluntary Tax Disclosure Program. Do you have some undisclosed taxes that you have not paid, and you have reason for that? They're saying, just come. We'll have a conversation. We'll listen to you. What we're going to waive is we'll do a waiver of the penalties and the interest, and then we'll work out how you can pay what you owe us. And I think that's a good conversation. If you'd like to ask Monica any question this morning, just call us 0719-012-600, 0719-012-600. And if you'd like to get some of these conversations later on, you can get them on our social media platforms, on YouTube, on Twitter, and Facebook. We have these conversations recorded there. You can also now get them on your mobile device. And all you need to do is send an SMS. And let me tell you the number, 22840. Just send the word TSR to 22840, and you get highlights of the Situation Room any day on your mobile device. This is Kenya's biggest conversation in the Situation Room this morning, and every morning you have Eric Latif, Nduoko, and C.T. Muga joining us this hour. And the conversation is Monica Githuba. She is a tax expert in the Domestic Taxes Department of the Kenya Revenue Authority. Kulipa ushuru ni kujitegemea. A voluntary tax disclosure program is all we are discussing. Are you a taxpayer? Do you have some undisclosed tax obligations? KRA is telling you, just come. Just come. We'll work together. We'll work together on how you can actually regularize your payments, and you can now become completely tax compliant, and penalties and interest, those ones, off. Just pay us what you owe us. Monica, though, like you said, there are people who have that undisclosed tax obligation simply because they are unaware of this tax obligation. Now, you come up with this program of voluntary tax disclosure. They will not come to disclose because they're unaware that they have this tax obligation. It's just a lack of clarity on what exactly the obligations are or have been. What are you doing to get those people?
So every month we are holding in Nairobi, especially we are holding training sessions every first and second Thursday of the month. We are visiting the radio stations, whether that's even being vernacular, and even as a revenue authority, every tax service office in every region is holding the sessions, and also we are writing letters to our taxpayers. So we've sent about 51,000 letters to our taxpayers, informing them about this program and telling them how to take advantage of it. So you know that every tax service office, for example, like let's imagine Machakos town, there is a KRA office there. And the officers there know their taxpayers. So they actually, because the taxpayers we are talking about here are mostly maybe business people. So the officers know the taxpayers. You cannot be able to hide your business. So we are engaging them because we know them, and telling them, please come and take advantage of this program.
You know, there are some that you don't know because they deliberately want to stay under the radar. But one time, they'll get exposed. And that time when they get exposed, it will be beyond past this voluntary tax disclosure program. How do you encourage those ones to come out from hiding?
So mostly we are doing trust and facilitation. We want to trust and facilitate those who are willing to pay. But we also have enforcement measures for the ones who are unwilling to pay. We have an investigation and enforcement division that deals with taxpayers who don't want to comply, they are uncooperative, and those measures are provided for within our law. They might include agency notices, freezing of their accounts, liquidation, but the taxpayer needs to remember that we do not go to enforcement until we have exhausted trust and facilitation.
Okay. Are we looking at public communication and building an awareness? I mean, you did mention, all right, going to different media and talking about this, but even in terms of sending out messages as frequently as telling people that they ought to pay tax by said date, for example, June 20th, everybody knows that it needs to be done by 20th, for example. In terms of pushing out this information on a regular basis in the public, often, so that even those who will say, well, I didn't know this is what I was supposed to do, I'm not going to be able to go to your website to find out what my obligations are, that kind of thing. Will there be constant communication in terms of building awareness of what the obligations are on individual and business people alike?
Yes, we do that. And for the any newly registered taxpayers, especially those who have registered for PSD1 and the value-added tax, excess tax, we hold newly registered taxpayer seminars where we just go to our data and we check who has registered for this obligation, and we invite them for the session. And also now, of course, now we're doing this online, but some tax service offices where online is not possible, they hold their physical sessions. We are continually communicating with our taxpayers. And you find that the KRA offices have adopted a relationship model where you find that an officer has like a number of taxpayers they're dealing with. And the idea is that this officer communicates with these persons on a regular basis. Sort of like the way you have a relationship manager in your bank where you can call them if you need any issues. So we are adopting that. That is fully adopted in the large taxpayers office, the medium taxpayers office, and now in the tax service offices where we have started to develop that.
Let's talk about this controversial turnover tax. It's controversial because mainly people don't get to understand what exactly are you saying, that I need to pay you a certain percentage based on my projected revenues at the end of the year. Just explain to us turnover tax and where, how, who qualifies for TOT and at what point do they pay? Okay.
So I think there's a misperception there because TOT is actually based on your gross monthly sales. So this is the turnover tax is a simplified mode of accounting for your business income, and it has been tailor-made with the Kenyan SME in mind. So you find that previously, the only system that was available for a taxpayer in business is to pay their taxes under what we used to call an annual tax regime. In this regime, you had to know what is an allowable expenditure, what is not. You had to comply with the provisions of the Income Tax Act, which were too complex for some taxpayers. So the informal sector, especially after talking to them and engaging, they said, we want a simplified mode of accounting for our business income. So this turnover tax was introduced, and business persons, whether they be sole traders, partnership, or a company, can register for TOT if they have an annual turnover of between 1 million and 50 million per annum. They pay taxes at 1% of their gross sales on a monthly basis. So 1% of what you have sold. That's what we are asking for. And then now, if we need to do a compliance check, you can see that the work will be easier because we just ask you for the sales records to see that the information you have given us is accurate. So I think TOT is quite simplified. And for the business person who is just an SME, he doesn't have an accountant. You don't even need the accountant. You just need to add up what have I sold in this month. That lump sum figure is what we used to base the turnover tax on.
What is the difference between this and the minimum tax?
Okay. So you find that in the annual tax system, which is what the income versus allowable business expenditure, business persons only pay taxes when they make a profit. So you find that for many, many business people in Kenya, they've been in perpetual losses, meaning they have not been paying anything. And they're using the resources, the roads, the infrastructure that has been built with the taxes that we pay. So the government identified that as a loophole, and to seal that, the minimum tax had been introduced at 1% of the gross turnover. It was to be paid on a quarterly basis. And businesses whose margins are controlled by the government, some businesses were withholding taxes collectible, were not subject to the provisions of minimum tax. But that matter is still in court. But I think the main thing to note is that this minimum tax was meant to ensure that there is fairness in the tax system, that everyone who is generating taxable income in Kenya, especially as a business person, is paying something to the tax bracket.
Okay, one of the reasons why I was bringing up the turnover tax is because we've also had some complaints from those who have this obligation on how you calculate it. When you say that it's just a percentage of the gross sales, a sale is not necessarily an income.
Mm-hmm.
And if you're looking at my sales this month could be 10,000 bob, but my expenditure is almost just as much. So you're still taxing, and yet I have not made an income. I have not made money.
But you see now, okay, most business persons, any business model, you have done some form of costing. So you buy maybe at 100 and deciding to sell at 200. So there's a margin there that you put into place when you're pricing your goods or services. So we see that this tax was targeting that 1% of your gross turnover. But then, if you're a profit-making entity, you still do a comparison and compare the installment tax payable versus the minimum tax and pay the higher of the two. So that was the law as it was. But now this matter is in court, and the discussion is still ongoing on whether we will collect minimum tax or not.
Look at a situation where you have a business, and indeed, yes, you had a turnover and you even had a profit margin. And then we have COVID, and suddenly, yes, you are selling, but the obligations you had in terms of your overhead costs still exist. So, yes, you sell, but in reality, at the very best, you probably break even, but you're not really making money. So, even with this, there will be a turnover. So, am I still expected to pay this minimum amount from this turnover when it is clear that I'm actually not really making a profit?
So the intention of this law was to ensure everybody is making a contribution, a small contribution to the tax basket. Yeah. So the 1% of your gross turnover was supposed to cater for all the taxes. That's your final tax as a business person. The system that is based on profitability also has this provision that you carry forward your losses. And now with the Finance Act that was just read, a taxpayer can carry forward their losses until they exhaust them, so perpetually. And that cushions the business person, but also ensures there is fairness, because this business person is using the roads, the communication networks, all the infrastructure, and this has been financed by other taxpayers. So it seems and it's very unfair for certain people in the economy not to pay something small, and the 1% is something small, and it ensures there is fairness in the tax system, that everyone is contributing their fair share of taxes.
Actually, I understand what you're saying. I even see the logic behind it, because a similar discussion is still ongoing in the US, where the number of people who are considered to be perhaps the richest in the country have been accused of some not paying tax or paying at least a minimum tax. But that is because their tax laws appears to only tax, in many cases, the income that someone earns. So if you understand the laws well, you can circumvent this. One, you simply make sure that the income you earn is minuscule, or whatever you earn is couched in a way that it does not attract taxes. I understand the logic. But what I'm saying is, even with understanding the logic behind what KRA is thinking, how then does somebody who is trying to stay afloat, how do they come to KRA and get the sort of understanding and relief? Because some people, you're talking about 1%, some people actually need relief. Some people actually need to be assisted they to actually stay afloat and to continue hoping for the day when this tide of COVID turns around and they're able to actually do good business. Does KRA have a facility for helping them understand where they can seek and get help to sustain their business despite all these things?
So now, the minimum tax issue is still in court, so that discussion is still ongoing, and then we're going, as the Revenue Authority, we're going to get guidance from the court process and go forward. But for now, what we have are payment plans. So even outside this voluntary tax disclosure program, we have payment plans where a taxpayer can come in and say, I have this tax liability, but I'm not able to pay because of certain reasons. then we will give them a payment plan depending on their ability to pay. This ability to pay will depend on maybe the evidence they provide with us that they're going through some cash flow issues and such. And also, we also have a normal waiver of penalties and interest. Outside this voluntary tax disclosure program, a taxpayer can always apply for waiver of penalties and interest as long as they can give a reason and be able to support why they need this waiver. So we have all that. And we said we have relationship managers. So as a taxpayer who's in business, who is aware that they are supposed to pay taxes, they want to comply, engage with KRA on a regular basis. Get to know the officers that deal with your account, and so that you can even call them beforehand and tell them, okay, I can foresee that I will not be able to pay the full tax liability by the due date. What options do I have? And we're going to facilitate you in the payment of taxes. So remember, KRA is not in the business of killing the goose that lays the egg. So we want to support the business persons in Kenya. There's no, the Kenyan economy is going to be heavily reliant on the business people and the growth, whether it's in the digital space. So it's in our interest to support businesses. We are together in this, so there is no way we are going to be collecting taxes in a way that is going to put somebody out of business.
Right. It does, however, seem that every now and then, when having been granted an opportunity for a new tax, that KRA is quick to jump on this and say, all right, here's an opportunity for another tax. Let's go ahead and use this. It does then appear as that. And I'm letting you know what the heartbeat of the people and businesses are actually feeling at this moment. And they're basically just waiting. Come another year, there is the fear that there will be another tax that then is formulated in the bowels of KRA and then presented to the people. So is there any kind of assurance that you can, I mean, from what you're saying, yeah, we need to protect the goose that lays the golden eggs, but it would appear as though you're keeping it fat so that you can, keep taking from it. So what assurance are you able to give to business people that, you know what, we're really not just interested in taking away from you, but we can also play, I mean, in as much as it is your job to collect taxes as KRA, to be clear and not that, to be clear that we're actually trying to make the business environment healthy for you, because it appears to be the total opposite.
Okay. So one of the things I would say is that as a revenue authority, we have to have our eyes on the market and to ensure that we are collecting taxes where they are due. For example, the digital service tax that was introduced from 1st of January this year was to tap into the digital space. The platforms that we use to have the online meetings, these are non-resident entities with no physical presence in Kenya, and they're generating taxable income from Kenya. So we need to tap into that. And we see even Kenya is one of the countries, the first countries in Africa to have a digital service tax, to go into that space and boldly say, we want to collect these taxes from this digital economy and not to be called into waiting for a global tax or global digital service tax. So we have taken a bold step to step into that. Maybe the issue now is the misperception of Kenyans when they hear a digital service tax, they're like, oh my God, another tax. Without going further and seeing who is the main target in this tax? Why the new tax? Because they're new frontiers.
Shouldn't you be making this information clear, though, when it comes out, Monica, that when you say there will be a digital service tax, anything that Kenyans hear is, oh my goodness, tax. So wouldn't it then be in your position to say, this is what is coming about, this is what it means, this is who it is targeting? Because you'll find that people might then go back into a coven of fear because they don't understand it.
I think the conversation was there I think we were everywhere on the digital service tax. And we have continued to improve that law. For example, now, the law is quite clear that only non-residents are subject to this digital service tax. And this was introduced in the Finance Act of 2021. So for anyone who is interested in this conversation about taxes, they are going to want to find out more. And how does this relate to me? What you find is that the direct taxes that you pay, whether be it an individual or a business person, will not change unless you have broadened or expanded your business and maybe tapped into another space. For example, if you've been having a business and then you now start investing into the rental space, you find that we have to collect the taxes from that rental space in all fairness. So the Income Tax Act has what we call separated or specified sources of income. And it means that each stream of income has to have taxes paid off that so as to ensure that there is fairness in the tax system. One of the key or the beauty of this Income Tax Act is that we have had it for so long. It's gone through court processes, adjustments, loopholes have been filled, and we can say that now we have an act that reflects us as a Kenyan economy. And one of the core values that we have adopted now as KRA is simplification, because we want it to be as easy as it could be for a taxpayer to pay their taxes. So I hope you can see the efforts that we are making.
We do see it.
At the end of this effort, we are going in that direction and boldly assuming the role of a revenue authority that is quite friendly.
The effort is commendable, Monica. There's no doubt about it. But there's this little component in our constitution that somehow people seem to either skip or not take too seriously. It's called public participation. You see, beyond what we are now doing, because this is public participation in a sense, because the public is listening, they can contribute, they can talk in. But the efforts that are made to not just tell the people what you're doing, but also to understand what they think about what you're doing. When you say you introduce the discussion about it by telling people this is what we want to do, did you have a mechanism for getting feedback so that people could tell you, okay, this is what you want to do, okay, this is what we think about it. Why am I saying this? What you're saying is good. What you want to achieve with it is good. But if the people with whom or among whom you want to implement it, if they are not with you, if they don't, they're not working hand in hand with you in their understanding of it, then they will resist what it is you're trying to do. Not because they want to go against the law, but because they don't fully understand. So, what is KRA's position on public participation?
I will use the example of the Digital Service Tax. You find that before that law was implemented, there was constant discussion with the key players or the players in this economy. And by the time the law was out, they knew it was coming and they were engaged with it. Even as the turnover tax, the informal sector was with us when we were having the discussion, stakeholder engagement to know what do you need, what kind of system do you need. We even got suggestions from them. So maybe the thing is that if a taxpayer is not in maybe an association that is in conversation with KRA, they might not be able to see us or feel us, but we are there. And we are talking to the Duakali associations, we are talking to the players in the different, the ones who have come together as maybe even the cottage industries. We engage with them on the regular and we are telling them, you have a part to play. And also remember, KRA is an agent of the government. So the government will come up with the laws that we implement. They'll invite public participation when some of these laws are being formed. And of course, KRA plays a key part in this discussion and in some of the policies that come in. But we encourage Kenyans to become very aware and to participate in this forum, join associations that actively want to support you in tax compliance, and go forward and do your best.
You know, much as, again, we appreciate what you're saying, all these organizations and the communication you have with them and the discussions and the participation that we consider public participation is all good and well. But anything that KRA does, all they do is they pass it down. If you tax them, the person who ends up bearing the burden is this mwananchi who doesn't own the SME, isn't in the Juakali industry, but who participates in this process by enjoying and paying for and buying the goods that these institutions and these organizations produce. So when I say public participation, it isn't a criticism on what KRA is doing. I am saying expand your vision as KRA, just as you expect the citizens to understand, expand your vision and think more about engaging the public, not just these organizations, a little more. You may find it may actually bring you better dividends.
That's true. For example, Monica, the case that you've given us of the digital services tax is a good example. It was announced, it came into effect in January. Between January and June, It has gone through evolution, whereby by the time we are now coming into the Finance Act in June, there's some changes to it and clarification that only the companies that are non-resident are the ones that are liable to pay the digital services tax. This should have come out initially from January, if indeed there had been adequate and sufficient public participation.
Okay, so of course, any law that is made, you see, like when we are setting up this digital service tax, we have no model sort of available for us in Kenya to set up this regulation. So what we do is we look at other jurisdictions that have adopted the digital service tax and try and implement that. But when you roll something out, you're going to get feedback, and you're going to see, okay, for the resident person, let them remain just like any other taxpayer. And then we have that cleanup in our laws. And that's something that we have to accept in any law that we make, whether that be a tax law or any other law. When you now implement it and roll it out, you find that there are loopholes, there are places you need to clean up on, and the Finance Act helps us do that. So the Finance Act actually brought that clarification, and it has simplified the terms in collection for us and as a revenue authority, and also for the local key players in that economy can now continue paying their taxes like any other taxpayer, whether they be in a physical marketplace or a digital marketplace.
Monica, thank you very much for joining us this morning. Very good insights that you're giving us on the work that you're doing at the Kenya Revenue Authority. We invite you next time, come and join us here in the studio so we can have the conversation one-on-one.
Okay, I'll be glad to come. Thank you so much for having me. Thank you so much for the Kenyans who pay their taxes. I hope that you've heard that we are willing to trust and facilitate you. We want to hold the hands of any taxpayer who wants to comply, and we are going to support you as the Revenue Authority in this economy.
You're a good preacher. They should know that.
I think we will say amen, sister.
Right.
Monica Githuba is a tax expert with the Kenya Revenue Authority working in the Domestic Taxes Department. We've been talking about the Voluntary Tax Disclosure Program. Make sure that you take advantage of this. And also, if you'd like to get any of the highlights from this show, the Situation Room, any day, you can get this on your mobile device. Just text the word TSR. Text TSR to 22840, and you'll be getting highlights from the show.
This is the Situation Room, the only way to start your day.